I just wanted to do it.
New Zealand property investors are currently behaving like an All Black captain after a dodgy penalty, pacing around and grumbling. Inflation's chewing through wallets faster than Bowden Barrett through the Wallabies backline, and here's the twist. While everyone's arguing about whether Auckland's cooked or Christchurch is the new darling, the real money isn't in the cities at all. It's in the 1 hour commuter ring, the stretch of towns that sit just outside the chaos. Places where you can buy a home for half the city price, rent it for more, and still have time to make dinner before the motorway clogs. So today we've brought in a man who doesn't panic when the market sneezes. Blandon Leung is back. He's here to explain how the smart Kiwis are using what's basically a 60-minute radius to cheat code to beat inflation.
Financial freedom faster. Financial freedom faster.
Before we get into it, if you're serious about property, start with the MortgageHQ snapshot. It's ripped the lid off the game for thousands of Kiwi investors. No fluff, just a sharp look at your real options. The description's below. Take the shortcut. Blandon, I just learned something. Your surname really is Blandon Leung. We've been saying it wrong all our lives. Well, I have.
Well, I think the reason for that is I kind of got tired of explaining how to say it. So
I can't understand why Blandon Leung, and today we're going to learn about the 1 hour ring. You learn from Blandon. Tell me about the 1 hour ring.
Actually, this started with a hunch, right? Because I thought about my own portfolio and had a property in Martin, which is sort of like 40-minute drive from Palmerston North.
Yes, I know it very well.
And I look at that property and I'm quite happy with the investment, right?
Can I ask a question? Why would you buy in Martin? As someone who actually owned a property in Palmerston North for 7 years, why would you buy in Martin?
That's a good question. So when the deal came to me, it was from a property finder. You guys might have heard of his name, Hadley.
Yes,
been on podcast.
Yeah, I know Hadley.
Yeah, and he still owes me one more deal, so I'm waiting for that. You know, like the golden opportunity.
But why Martin? It's not the place.
Okay, so at the time, Hadley said this deal fell through with another buyer. I think it's really good. Would you like to do it? I'm like, I looked at the deal. It's very old. It was a very old house, but the cash flow was exceptional. It was already starting, I think it was close to 10% gross yield. So it was very run down. Like there's no one living there at the time when it was shown. And it was on a pretty nice section. So I looked at it, and then there was also a house just like a couple of streets. It wasn't even a couple of streets. You can probably walk. It's walking distance.
It's only 2 streets in Martin.
Yeah, exactly. So it's like, I looked at it, like that house sold for like 150 or something like that, more than the house that I'm looking at. And the section was around the same. That was like a nice first home, like I would say like a nice house. This one is like a multi-unit. It's got 4 units. And I'm like, well, I'm getting a discount. The cash flow is good. And it's like slightly below compared to another property just up the road. I'm like, all my downsides sort of like mitigated, right? So I can lock in the cash flow. I would say, well, the next thing that I was worried about was like, well, I'm getting a discount, so like a lot of the stuff will be fixed if I just maybe add a little bit more money in. But the downside would be, what if I don't get rent? And I said, Hadley, the next thing I need to know is whether or not we can lock in some good rent, and maybe some consistency, low vacancy rate. And Hadley pulled it off. He got me a Salvation Army contract.
Oh, okay.
Yeah.
Clearly.
But these guys, the risk was they were not going to sign it before things were fixed. They were interested, but, I just kind of made that bet that, hey,
So how long have you had it?
I think it was 2022.
So as someone who knows Palmerston North really well, started off my broadcasting career at 2XS and love this place. My heart, part of me is still in Palmerston North. We bought a place in Roslyn, and Roslyn is 3.5 kilometres away from the centre of Palmerston North from Broadway. Now, when you live in Palmerston North, that feels like you're travelling down the southern motorway. So the idea for me that you've bought a place in Martin, and 25 years ago, I was a first-home buyer. That was the first house I ever bought. I could never imagine buying in Martin. So,
Yeah.
so this is your concept of the 1 hour rule.
So over like time to time, I like to reflect on, okay, if something went well, like, is it just luck, or are there some things that I did that was right? In terms of the deal itself, I isolated, is there enough margin of safety? Because we might have talked about that in another podcast. It's basically buying something at a discount.
Yeah.
So if it's got enough of a discount, then I kind of mitigate some of my risk. And if I could renovate it, maybe resell it, maybe I could resell it at cost price. Maybe I'd make a small loss. It's still all good. The second thing is that I could lock in a positive cash flow. Those are the two things that I sort of made the move on. Not so much like I was like jumping up and down to invest in Martin, right?
Oh, right.
But it turned out that this deal, you know, like over the couple of years, like I got a valuation like 1 year later, and it was already like 200,000 more than what I bought it for.
But it's only worth what someone's prepared to buy it for, obviously.
Yeah, you're right. You're right. Absolutely right. But I only spent 80,000. Sorry, so I spent 80,000 on renovation, 200K. You know, well, it'll be about 120K. So that's about 20% increase in value, and over time, it's only gotten better. Like the rent's gone better. I've never had vacancies. Salvation Army's been looking after the property, and so I started thinking, okay, what if this is like, what is the thing that I got right here? I think Palmerston North is a desirable town. It's like one of
Fantastic place. The university ensures that you have a seasonal people coming in there all the time. That's one of the reasons why we bought it as a rental property too.
Yeah, absolutely. I love Palmerston North because when I went down there, I liked just chilling at some of the, like, there's a main street with all the food. You can
Broadway and yeah.
Yeah, you can just go to all the different restaurants. I quite like that area, and there's a few places where there's a bit more amenities, like the government spends some money.
I don't really want it to be a sales routes thing on Palmerston North, even though I love Palmerston North. But let's get back to your concept of the 1 hour thing, because looking at Auckland, Warkworth is a place at the moment that used to be a backwater. Same with Pocono was always a backwater. It's where you used to go and get an ice cream. But now these are places where an hour out, this is...
So I start with a hypothesis, which is what you're saying. It's like, okay, well, what if this is a thing you can apply? So I started talking to the GPT. I said, look, do some research for me. I want to see what kind of cities and towns are like just within 16-minute drive out of the main centers. So it came up with 7 cities. I've got this right here.
Yeah, we can put that up on the screen. In fact, I'm happy to put that up on the screen.
Now, I want to say, because this here is a GPT report, but if you guys want this, put in the comment, because we're not going to put it out, but if enough people say, yeah, we want this,
I'll put it up. I'll put it up on the screen.
no, we're gonna make them do the work.
Okay.
Yeah, we're gonna put the comment.
All about the work.
Essentially, what this is, it's got 7 cities: Auckland, Hamilton, Wellington, Christchurch, Queenstown, Palmerston North, Tauranga. And it showed us, okay, what are the 60 minutes towns that you can sort of explore? And funnily enough, there are like about 80% of these towns I recognize in my clients' portfolios that have done really well.
Well, let's just stay on the Auckland one, because predominantly our audience is most familiar with Auckland, even though we've done a love fest on Palmerston North. And you've got Helensville there, which is, again, is another one it's 26 kilometres away from, I think, Westgate. But, you know, I've had a friend who's lived there for 30 years. You know, he's a cop and he's a sergeant at Helensville Police Station and never wanted to move out of Helensville.
Yeah, I would say some of these towns are quite attractive, especially Auckland. You've got a lot of infrastructure projects. I mean, if you Google it, you're going to find a lot, even if you look on the council. Auckland, I would say, I don't have a whole list of clients that I can remember, but definitely I've seen Pokeno, Pukekohe do well in some of the portfolios that I've looked at. If you look at Hamilton, like that whole list, we have clients with properties that are doing quite well, like over the medium term. Tokoroa, Morrinsville, you know, you've got really good cash flow. Huntley, I remember Kasuma, one of our best students in property formula workshop. She did a really awesome deal in Huntley.
Really?
Yeah, yeah. I'm amazed. Like I was shocked as well. Like with the numbers that she gave me.
Like Morrinsville's bigger than what you think, but all that Waikato area with the farming and the like, it's not that surprising.
Yeah. Yep. So that's cool. I mean, that's a fair comment. Let's look at the next one. We've got Wellington. Whakatane? No, sorry, that's not.
Wellington, I lived in Wellington, so whereabouts are they? Oh, Waikanai. So Waikanai is rich,
Whakatane is
old,
Tauranga.
living, yeah.
Yeah, that's what you feel. Okay,
Carlos Spencer.
so here's the thing, right? Like it's so good that if when we bring these cities up, your feeling is like, oh no, I don't feel like that could be a good one. But when I look on paper, what my clients or our clients have done is they actually invested in those areas. They were good cash flow properties.
The ones I've got there are Paraparaamu, which is lovely, but it's rich white old. You got Waikanai, rich white old. Levin.
I remember some 9% in
And Featherston, I don't know it that well, but you're in between. You're in between Wellington and Masterton. So
Levin. I've seen several clients actually buy properties there because they tend to have big section and they can put out minor dwelling. So
it's not a
cash flow
it's not a
positive.
backwater. It's not Martin. Like I'd live in before I lived in Martin.
Well, sometimes this is the thing about properties. We have these stigma about certain cities. And I think if we apply the lens of, okay, well, I've seen clients do well in these cities. What's the common theme here? Is that they are close to the cities that are desirable, not too far away. And essentially, over time, people have to go, you know what? It's more affordable to be out there. There's going to be demand moving out those ways. And the second thing that's really important, I think, is the rent actually don't scale like the property price. So you are getting like you've got this mitigation to like the main centers, but also you're getting like a much higher return on cash flow. And that's what you're seeing because Ashburton, I remember like Rolleston, like these are pretty high yielding towns. Live in definitely Rotorua is huge. Rotorua is like Rotor Vegas, that's what they call it.
A bit surprised at that, and it's pretty sad place these days. But okay, if someone's watching this and wants to know more, this is part of what MortgageHQ specializes in, particularly Blandon. We learn from Blandon. What's the best strategy if you're wanting to hear more about your concept here?
So if you remember what we talked about, what makes property price go up, right? There are three founding principles. First one, the big picture, is to do with population, right? Is this city going to be more desirable in the future? I think main centers are always going to have the first government investment, which is like the second thing that we look at. Is like population growth, does it have job growth? Do people want to live there? That's the big picture. And second one is then looking at what are the government spending, like the infrastructure, because that's going to make the city worth more in the long run. So you can see all of this research. The budget for the government, the council. What are they going to put in terms of infrastructure? This is actually something that I shared in the workshop as well. Like several websites you can.
Are we doing workshops anymore?
Yes, we are. We are still doing workshops. You can jump online and check out the property formula workshop. We are just bringing that back, and we're probably gonna have like a brand new set of series like coming up in the New Year's. So definitely check that out. And the second thing is about the government spending, and then the third one is the short-term demand is based on interest rate. So when interest rate's high, it's likely that the entry point for these properties are going to be like they get a higher discount on these properties. So that means with this in mind, I think you can go back to some of my learning on Martin. It's like, well, first of all, am I getting a margin of safety? Second, is it if I lock in cash flow for 3 years, 5 years, worst case scenario, I sell it at cost price, like I haven't lost any cash flow because I've locked in positive cash flow. And the third one is, well, what's the development opportunity? Like, well, with Martin, for example, because I'm buying a big section, right? I can put another 2 dwelling on it. Like, it's something that I just picked up the phone with Keith A. Homes, say, hey, can you do something on this property? Yeah, it's like, oh yeah, we can probably chuck 2 more on there. Like, if I wanted to do that, I can. But it's like, it's good enough as it is. I just need to do the renovation and just rent it out. Yeah.
Blandon Leung, thank you very much. Learned a lot today. We need to call you by your real name. We do.
Yeah. Thank you. I appreciate it, Craig.
There we go.
Everyone, Craig Stanaway.
Yes.